All right, venture capitalist Bill Gurley, if you missed it, was on Squawk Box this morning, and he weighed in on some of the eye-popping valuations that have been floating around the private markets.
We may be in a permanent world of having lots and lots of money in the late-stage private market. And the people that are making these decisions are relatively intelligent. And I think they've come to believe that once a company gets a breakout lead, that there's a high probability that's going to continue.
All right, let's talk more about this and more. Joining us, fellow venture capitalist Matt McIlwain. He is a managing director at Madrona, an early investor in Amazon, Snowflake, and other names. So congrats on those, Matt. I mean, they've made you a little bit of a pretty penny. Before we get into valuations and tech and private equity, do you have a hot take on this OpenAI story?
Well, I was on the show in November, the day that Mira became, for a very brief period of time, the CEO of OpenAI. And so senior leadership drama has tended to be a common theme at OpenAI. But I think what we really need to focus on there is not the people drama and more what are they executing on. And in this respect, they're doing some really compelling things. New model out called O1. We're starting to get into greater reasoning versus generative models. That's going to be a really important area in the year ahead. And they've also figured out how to have a business model. Really, the business model is around ChatGPT. That's, by most people's reports, 75% of their roughly $4 billion in revenue. And that's the key for all of these companies. We track something called the Intelligent Application 40. We published that list with all the venture and technology folks contributing to it. And the most interesting thing is that while OpenAI and Hugging Face and Runway ML are constants, there's a high degree of churn every year in these top 40 private companies in the IA 40 list. And so just like Bill Gurley was just alluding to, the question is going to be, if you have an early lead, do you have a durable lead? And I think OpenAI has a strong position, but there's plenty of other challengers, both at the model and the application layer.
Yeah, a lot of challengers out there. All right, Matt, so talk to us. Private equity. Is private equity in a big way starting to poke around technology again?
I would say a massive way. I mean, I've seen this firsthand. Of course, it was announced this week that a company I've been on the board of for the last 17 years, Smartsheet, signed a definitive agreement to be taken private by Blackstone and Vista. And so you see it from that kind of a perspective living through one of these types of transactions. But in addition to that, there are many categories that private equity is actively looking at. And the reasons why is that we now have a constraint on the strategic buyers, the Microsofts and Googles and Amazons of the world, where they've got a lot of scrutiny at the federal government level. We've now got not only a stable economy, we can all debate whether it's a strong economy, but it's stable. And now we've seen the interest rate cuts. And so even before the interest rate cuts, private equity was getting quite aggressive, particularly in the tech sector, because there's a lot of smaller cap public companies that have largely gotten fit, but probably can get fitter and then need to work on doing some change the game things for growth. One of those things, by the way, is AI. But what we're seeing is the private equity folks look both for smaller cap public companies and then quite aggressively at some of the later stage private companies, particularly application companies in areas like sales automation, supply chain, various categories where there's probably a need for consolidation of a bunch of companies that are generating 100 to 200 million-ish in revenue, and 1 + 1 might indeed equal 5.
I love that take on big because remember the old baseball player Yogi Berra. No one goes there anymore. It's too crowded. And I love the take, which it sounds like you're saying that Oracle, Amazon, Microsoft, Google, maybe even Salesforce, all the companies that did all the buying, they were the strategic buyers, they're now too big. That their likelihood of buying anybody of size is probably not going to happen. Is that what you're saying?
Well, I think that is a factor. And what's interesting is that they can't buy, or it's not as easy for them to buy a smaller cap public company. They want to buy a medium cap public company. But then they have another constraint, which is, the FTC specifically, the government more generally, is not taking kindly to consolidation by strategic, companies right now. So it's got to be big enough to matter to them, unless it's just a tuck-in acquisition, or they have to find a way to navigate and take on the regulatory hurdles. So they're kind of on the sidelines right now. Maybe that'll change after this election cycle. And so the PE folks who have all these other good tailwinds also have the fact that they're really the ones that are playing, much more aggressively in the, kind of in the market. And I think you'll see that when companies' proxy statements come out and how they, kind of navigated these situations. But the PE folks are quite active right now.